Hi there, traders. This is Brad Gilbert with FX Market Insight for Friday, the 4th of June. All right, new month, new activity, and we're starting to look a little bit more streamlined. Now, this isn't going to take long because we've got the non-farm payrolls today in North America. That's the major focus. And if you haven't seen it already, we've had a bunch of US data come out, much better than expected. And this is like a brief return to normal markets. And what we're talking about is strong US numbers, US dollar rallies, right? And up it goes. What that means is strong data means there's a chance of the Fed being pushed into the corner to potentially change their forward guidance to not raising rates like now, but sooner than what they forecast. Equities go down, and this is like just a normal situation where, like back to normal in the sense that, okay, macro, strong US numbers, US dollar rallies. The implication for high interest rates is equities would get hit, and we've got that normal relationship back in place. Now, you look at the majors, right? This is why that North America session is so important. It's the epicenter of, it's the main central bank that is giving us guidance on what's going on in the economy. So it's very transparent. Check out these moves across the board. I mean, you've got, we're talking about this yesterday, like having a very clear signal for what's going on. The US dollar has reacted across the board, and we've got trend lines. We've had opportunities. If you're awake and you saw the opportunities or you had pending orders, you would have made some cash, right? There's no doubt about it. Now, coming into today's trading, we've got the exact same thing, but bear in mind, the currencies are now up in the middle of nowhere, or not really middle of nowhere. Some of them could retrace, right? But the main entry, you're probably squaring up, or if you want to reduce your risk, square up before the non-farm payrolls. If we get strong employment numbers out of the US, the dollar's going to continue to rally, right? It's simple, right? If the numbers are much weaker, right, then we're going to see these moves correct. So there's an opportunity both ways. Now, if the currency is correct and we get really weak US numbers, it's probably an easier trade because it's coming back to trend lines that we know and have. If you don't have those trend lines up, now the next best thing you can do is go back to your daily trend lines, right? Because once we've gone through the main short-term hourly trend lines, you can start to look for those bigger moves. Now, you can see the dollar index is banging up back towards, it's back above that previous support line. Dollar Swiss, you know what? This is the start of a big move. Dollar yen looks like a pair that could really start to run. And you've got dollar CAD still in a downtrend, but we've got a trend line up above here. Euro's back into the range. There's not an easy entry on the downside in euro, as it is with sterling. Not an easy entry unless it drops another 150 points, which is a bit of a stretch. Aussie's already sort of dribbling lower. No easy entry on the downside on Aussie. If anything, Kiwi's got a better potential entry on the downside if we get strong US employment numbers. Now, this is going to be tricky, right? So don't think like, oh, great. Okay, we get strong US non-farm payrolls and we just make loads of money. There are a lot of variables here. To lead in, we get the retail sales out of Europe. This is a good one because Euro's already got clear direction to the downside. So that could give us an opportunity. In fact, it would be good to see strong Euro numbers because then we get Euro a little bit higher and you can sell back towards that retracement. But when it comes to the non-farm payrolls, right, there's a whole bunch of data. Let me just circle this. And we've also got the Canadian employment numbers. So dollar CAD is going to be very loose as it sort of processes all the data very quickly. But just with the non-farm payrolls, see how many data releases there are. Get the payrolls, the private payrolls, manufacturing, government, the employment rate. So the top three for my liking is the non-farm payrolls, the unemployment rate, and the average earnings, right? These are the things that the Fed were concentrating and focusing on pre-pandemic. If they're all strong, dollar's going to rally. If they're all weak, it drops. Now, if some of these are up and some of these are down, you're going to get that volatility in the price action. It probably isn't going to go anywhere, right? Just be aware of that. So if you're trying to trade this live with pending orders, it's problematic because there will be very little liquidity at the time of the release, okay? And that's where you get those price spikes on your charts. The answer will be there 5 or 10 seconds afterwards. You can see, you can just look through and go, okay, these are strong, these are weak, and then get into an opportunity. if you see on really strong numbers, the dollar spike higher again, you probably want to wait, look for a little bit of a retracement a couple of minutes in, and then potentially try and get long. But you know what? Today's move with the US jobless claims and the ISM non-manufacturing, all the numbers in the States, or most of them, are now coming out strong. It's the start of a new month. This sets us up for a strong dollar coming up to the next couple of weeks until the US CPI at the very least. And that's a good condition, because when the US dollar is rallying aggressively, or one clear direction, it's very easy to pick off the major currency pairs, right? It's going to be very interesting to see how this plays out, but keep an eye on things. I would expect, you know what, the volatility index, the VIX, to probably spike above 20 up towards 23 as we get closer to the non-farm payrolls. Strong US numbers, the equity's going to get it's going to be a bloodbath, right? A sea of red. Expect that for sure. The dollar will rally, the dollar block will fall, and that's as easy as it gets. This is really good trading conditions, guys. You've got to be ready. Hopefully you haven't had massive drawdowns and you're just trying to like scramble. This is what we've been waiting for. And it's all going to come down to this non-farm payrolls for the next big leg of the dollar direction. All right, guys, good luck. All the best. Cheerio.